How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for January 9, 2018. So, right now we are in Monday, January 15. We're going to take a look at the data that was recorded as of January 9th. And so let's take a look first at gold. What do we see with gold? Institutions increased their long positions from 241,000 to 289,000 positions long. And that comes with this green candle right here, rallying hard off of the monthly demand zone, straight up into this weekly supply area right here. Okay, so getting very aggressive. Net positions increased from 163,000 to 203,000, and long exposure jumps up 1 point from 76% to 77%. So taking a look at the coloration of the cells, we can see back here they were very bullish biased, right? But 77 is not as bullish as 82, obviously. So the coloration of the cells represents that. So we still have room to see the institutions add more to their long. Okay, they technically have a lot more room to do so. So with the shorts also increasing over the last couple weeks, 66,000 to 78,000 to now 85,000. I'm waiting to see if there's going to be a drop here. I believe that's going to happen. The US dollar is hitting some higher time frame areas of demand, and the euro is hitting some supply, so I'm expecting some move to the downside from here. And I think that's why they are increasing their shorts up at these highs. So I'm expecting a move to the downside. Once that does happen, I'll be looking for areas to get in. Ideally, this is the best place to get in long right here, but I don't know if that's gonna drop all the way down here like this. Okay, especially with these numbers here and being so high up here. It may not happen. We might just get a small decline and then a move to the upside. Excuse me. So that's what I'm watching to see what's going to happen. But I do want to get in long on gold. Oil, we see long exposure increases from 762,000 to 801,000. Shorts also increased just very slightly, but overall shorts are cooled off. 85% long exposure to the long side, and net positions increased from 624,000 to 657 positive positions. So this comes as we consolidate here on the weekly chart, and what we can see is that price eventually broke up to the upside, and we have just removed a 6-month bearish engulfing candle, which is huge. It was a major obstacle keeping price from just shooting up to the upside. You know, we had some stalling action here before that move to the upside, and now that block has been removed. So we got a nice upward trend on monthly. We got overextension on the weekly. I'm waiting for them to take profits, because at 85% we've been holding these numbers for quite some time, and shorts are still cooled off. So you know, these numbers are very aggressive. 801,000 long positions versus 143 short positions. 85% of their overall exposure is geared to the long side, so I'm waiting for them to take profits. They've got to take profits at some point, and then I'll wait for a pullback, then a momentum shift, and then I'll get into the long side on oil. But with these numbers being 85, I don't want to get in long here. They're already so overly exposed to the long side. This is a bad time to get in long. So waiting on that one. US dollar, what do we see here? We see that longs decreased by a little bit. Shorts sitting pretty much the same. 51% overall exposure to the long side, but bearish bias for quite some time based on the coloration of the cells. And what do we get? A nice drop. Okay, we were expecting this area to break because it was poorly formed, and that's exactly what we got, is that move lower. So not looking to take any trades. We're just about testing this area here, a weekly demand zone, where I'm expecting to see a move up. But then eventually I believe we're going to be getting price to head down even lower, down towards the 86 area. So I may take a momentum shift trade short if it's the right setup. So I'll be waiting to see what happens. This is a poorly formed area on the weekly chart, so that's why I'll be waiting for a momentum shift to the downside. Alright, so let's go to Aussie. So Aussie, we see that they increased longs from 45,000 to 52,000. Shorts, they closed off a bunch load of shorts. They were aggressive, starting to become aggressive at 65,000, and then became very less aggressive by closing off about 20,000 of those short positions. So long exposure is 53%. We are net positive 5.4 thousand positions, and so just like gold, gold is hitting weekly, was it weekly? Yeah, weekly supply, and I'm expecting a drop from it. Euro hitting supply, US dollar hitting demand. I think there's a good chance to see a reversal or a pullback to get in long, and this is the ideal situation here, getting in long here. I would love to see this so I can get in long, but we may not get that drop, and if we don't get that drop, then I'll be waiting to see where momentum shifts, and I'll be looking to get in if momentum does shift and supply starts getting removed. But I do want to get in long the Aussie, and I'm just waiting for the right opportunity to get in. It has to be the right setup for me to get in and be able to judge my risk properly. Okay, so let's go to the US CAD. What do we see with the US CAD? Longs increased from 34,000 to 41,000. Shorts also increased from 49,000 to 58,000. Now that's a pretty decent jump, right? So increasing longs, increasing shorts. Short exposure remains at 59%. Coloration of the cells is more bluish, so neutral, meaning don't make any moves. Net positions, negative 17,000. So here's the deal with the US CAD. Now I've been pointing out something very important for quite some time. We are sitting within a 3-month demand zone. This 3-month demand zone was responsible for removing a 6-month supply zone. So it's basically extremely strong, this area. We got a 3-month uptrend. We also have a 6-month uptrend. So I'm expecting this area to hold. This 3-month area of demand to hold and to price eventually go higher. Now we're seeing really good signs of this about to happen. Why? Because when you take a look at the US dollar, you can see that weekly demand zone broke. Okay, and we're heading lower. On this chart we have a weekly demand zone right here. It hasn't broke. In fact, it hasn't even been tested yet. Alright, so if the US dollar decides to drop a little bit further down, which is what I'm expecting, we definitely have room for price to drop here. Once that US dollar hits higher time frame demand and then momentum shifts and then we see a push to the upside, I believe if price is still sitting within here, we're going to see a really big move to the upside like this. We do have to get rid of this area, this weekly area of supply, but it's very poorly formed, so I'm expecting that this area would eventually break. So am I looking to take longs? I think if price gets down here to this weekly area of demand, I'll look for momentum shift trades and I'll take a long positions to the upside. I think I'll do that. I think that would be a good trade. Okay, looking at the data, they have more short positions than they do longs, but that would make sense since price was dropping, and this candle is what represents this data here, so that makes sense. Price was dropping, but like I said, longer term I do believe we're going to see a move to the upside. I'm just waiting for price to get down here, momentum shift to the upside, and then I'll take that trade. Okay, so let's take a look at the US Swiss franc. So US Swiss franc, I pointed out that price was hitting this weekly area of supply. It did, and then price dropped, which is exactly what we were saying was going to happen, especially with the US dollar weakness. So longs are still aggressive. Shorts are in neutral territory as we see it drop from 31 to 18,000. So dropped, and they're closing their shorts. Why? Well, we do have demand right here, and I'm expecting a move to the upside from there. So I think this is a very messy chart, although we had this really nice area of monthly supply and then trades to take short off of it, which worked out beautifully. Right now the coloration of the cells is slightly green, meaning bullish, so looking for momentum to shift down here. Nothing clear right now to take. There was some really nice short trades on the way down from this area here, but right now there's no real nice trade setups to take, so I won't be trading this pair. Euro US dollar, we see longs increase from 236,000 to 242,000, and shorts decrease from 108,000 to 97,000. So in the process, long exposure rallies up 3 points to 71%, and net positions increase from positive 127 to positive 144,000. So this is great for longs. This came as we are consolidating here on the weekly, and what do we see happening? We see that we get a nice explosive move to the upside. So right now, believe we're breaking through this area, or we've broken through this area of weekly supply, and we have an area here on the monthly chart of monthly demand, which is in confluence with the descending 3-month trend line. So one of two things are going to happen over the course of this year. All right, we are either going to see price come into this monthly area of supply, a huge momentum shift, and then a big massive drop, or price is going to come in here, slight momentum shift, drop down, slight momentum shift, and then higher. One of those two things are going to happen this year. Now if I had to guess which one I think is going to happen, I think I'm slightly more biased towards a momentum shift here and then a move downwards. I am slightly biased to that because when you look at all the other Euro cross pairs, it looks like that's what's setting up. So we'll wait and see, but that's what I'm watching for. When price gets up here, I'll be looking for short trades, especially if momentum does shift and the right setups appear. I'll definitely be looking to do that. Alright, pound US dollar, we see longs drop from 93,000 to 85,000, and a big drop from shorts, 77,000 to 59,000. Shorts becoming cooled off. 59% of their overall exposure is geared to the long side, very green, lots of room for upside, but I think it's going to be capped off here at this weekly area of supply. A little bit more room to move up there, and then a momentum shift, and then we're going to see some downward. It could be a little bit further up here, but it all depends on what the US dollar is doing at the time. But we're going to get a reaction from this weekly supply, that's for sure. So 59% geared to the long side. The cells are green, bullish. We've been bullish this pair for quite some time. Okay, let's take a look at the US dollar Japanese yen. Price dropped just as we had suspected. So long exposure 162,000, up about 1,000. Shorts are still cooled off. 81% of their overall exposure is geared to the long side. What did I say? Usually when exposure is in the 80s, we get profit taking, and that's exactly what we see now. So this data comes with this consolidation candle, but what do we see coming right after that? Big drop in price, which is exactly what we were waiting for. Weekly supply was tested. Exposure was in the 80s. We knew profits were going to be taken on long positions. That's exactly what happened. So just like the US CAD, if you take a look at this pair, US dollars breaking through weekly demand zones and lower and going lower and going lower. I think what's eventually going to happen is price is going to momentum shift here, and then we're going to see a push higher. Just like with the US CAD, it's not breaking through demand, so it's eventually going to hit some areas of demand on the weekly chart. Momentum's going to shift, and then we're going to see a push higher. So that's what I think is going to happen with this. And so far the data is following along, right? Because they are overall geared to the long side, positioned for a move to the upside. So I do think eventually we're going to get this move upwards like this. Alright, so last one is the Kiwi. So this one, so longs are cooled off. Shorts were aggressive, but they're becoming less aggressive. 62% of their overall exposure is geared to the short side. I said every time we were in the 60s, we saw price move up. So 60s, price moved up. And then we got into the 60s again. I said price was going to move. They were going to close off their shorts, and price was going to move upwards. And that's exactly what happened. So now we're coming into this monthly area of supply, and after re-examining this chart, I've come to realize that this is a very poorly formed monthly area of supply, and it's not very clear that it is a monthly supply. So I'm going to discredit this area and not put much emphasis on this area holding, because I do believe that eventually when the euro drops and the US dollar goes up, that we're going to see a lower Kiwi, a move lower. But at this point, I'm not counting on this area being of any real importance, because if the euro decides to head a lot higher, as it can, and the US dollar decides to head a lot lower, which it can easily do as well, I'd say that there's a very good chance that this moves higher up to here. Okay, so I'm just being very skeptical in this area here, and I'm not looking to take any trades because there's nothing really clear on this chart for me. All right, so let's take a look at the economic calendar for this week. What do we got? Let's see. Here we go, January. So I see that on Wednesday we have the Bank of Canada interest rate coming out, and besides that, nothing of great importance to me. So US CAD, great. So what do we see with the US CAD? Oh, okay, great. So we can really see one of two things happening: a move up here and then down, or a move down here and then up. So one of those two. Right now we're in the middle of the ocean, so not clear to take any trades in any direction. Okay, and that's pretty much it. Here's a snapshot of the latest data from the institutions. That's pretty much it. I hope you guys have a safe trading week, and until next time, have a good week.